Ladies and gentlemen, welcome back to the channel. AMC stock is down about 4.5% at the time of recording this video, sitting at $4.85 per share. Let's talk about everything going on today in the markets as well as AMC specifically, because things are moving around, things are pretty liquid, and the volatility is here. I don't expect this to be straight down nor straight up. At this point, you have seen the last couple of days quite red, which honestly is surprising considering what's going on currently with the court situation. So I think we have some things to talk about in that regard as well. So let's go ahead and get into all of this information. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comments section. So first things first, I want to start with saying there is nothing, again, news specific with AMC. It's just one of those days where the market makers and the shorts have taken control of the stock. That's the simple fact of it. They've taken control, and whatever they want to do is whatever they're gonna do. Take a look at the option activity. It's gotten a little bit more bullish, but you're still more than 9 times more bearish than bullish. You have a 10% positive order value, 30 orders totaling $3.5 million. These numbers are not pretty, right? And there's really no regard for hedging of risk out there. And it's just take on more risk, more risk, more risk. That's what the hedge funds and institutions are literally doing right now. After Friday and Monday, you would have expected a little bit less of that risk taking activity, maybe a little bit more hedging, maybe even, I'll be damned, some shorts covering. But you're not seeing that. The legal short interest, the real short interest, just went up to 29.05%. Pretty soon you're going to be in that 30% range. These numbers are out of this world. Now, note, AMC is still on the threshold securities list. This has been the case for probably about a month now. It's been multiple weeks where AMC has been on this list, and you don't hear anyone talking about it. You don't hear the SEC talking about it. Nobody. It's just all quiet when it comes to AMC. It's like it's fine if it's AMC. If it were Apple or some other stock, I'll be damned. We would have a problem. But nobody cares about AMC, apparently. Now, that is to your benefit, because eventually this ends in a massive way, and it ends with the stock going much higher. That's the only way this ends. If that didn't show you anything Friday and Monday, hedge funds and institutions are going to continue to do this until they lose, until they really get blown up, until they have to start covering on those short positions. That's the fact of the matter here. I wish I could tell it to you any other way, but that's what we can expect, is a blow-off top event and a massive rally once this thing does end. But what it looks like right now, hedge funds, institutions continuously, continuously load up on these bearish positions, which is just insane to me, the lack of regard for risk out there. Shorting AMC makes absolutely zero sense. But hey, let them do what they're going to do. In the meantime, just keep your vision on the long term. I highly recommend you guys also have long-term portfolios as well, so you don't miss out on what's going on in the markets, especially if you do have this AMC position, you put a lot of money in it. You don't want to sell it, obviously, and you're just waiting, right? You get false sign after false sign after false sign. The one thing that I do know is this ends in a very explosive way. That I know for sure, for certainty, as should you as well. So there is that. Now, cost to borrow fees across the board remaining elevated. Now, the day-to-day, I don't care what happens with that. Don't panic when these go up or down. It really doesn't matter. Now, when they go up and they stay up for a long time, well, that's a different story. That's a lot more bullish than just one day hitting, 1,000%. No, if it stays there for weeks, like what we have seen recently, that's a problem. And you can literally scroll down. It was 900% or more ever since I'm back here July 7th, and it was 947%. Even before then, July 5th, it was 500, 600%. You got to go back to mid-June to get cost of borrow fees 300-400. Point is, they've been high for a long time. So it makes these trades less and less profitable. It eats away at those profits literally every single day. And current cost of borrow fees around 350% across the board, 359% for the cost of borrow max, cost of borrow average at 345%. Now, currently, we're getting an estimated 150 million shares sold short, 29.08% short interest. This is pretty well in line with what we've seen released to us on July 25th, the last time we got an actual legal short interest report. So it doesn't look like things have moved around all too much, although these numbers did just update, and you're looking at 29.18% short interest of free float. This is up almost 1% on the day, and you are now at 150.63 million shares sold short. Looks like about 1.24 million shares being sold short here today. Again, like I said, option activity is also very negative. This ortex just completely updated, so I'll give you these numbers again. 34 orders now, worth $4.25 million, with a positive order value of 8%. Just think about this logically. Over the past week, you have seen 780 orders totaling $221 million, with a positive order value of 9%. At the same time, short interest is over 29%, and the real short interest of free flow is a lot higher than that. They're literally digging their own graves right now, and it's quite comical to watch, but they'll probably continue to do that until it blows up in their face. Now, if we take a look at the earnings that we got this morning, we're Royal Caribbean, McDonald's, Southwest, MasterCard, Crocs, AbbVie, Bristol Myers, and Honeywell. None of these are really broader market movers, although, Crocs had not so great earnings. AbbVie had good earnings. These are stocks that I'm investing in, and Crocs actually had great earnings. I think that's one of the most attractive long-term pickups right now for the shoes. Hey Dudes, let me know. This is kind of off topic. Do you guys know what Hey Dudes are? They're like my favorite shoe, and it kind of sounds weird. Whenever I talk to people, I'm like, Crocs looks like a good investment because Hey Dudes. But I pay attention to people's feet now. That's kind of weird, but everyone's wearing them. So I'm kind of curious what you guys think of them as well. Maybe it's a demographic thing specific to me. I live in Michigan, so maybe we're all just a bunch of Hey Dude wearing motherfuckers. But who knows? Let me know down below in the comment section. Now, as far as everything else going on here on the day today, the big story is really, really, really good economic data. Now, this is having a strange effect on our markets. I think the data was almost so good that obviously stocks went higher, right? The S&P is up 0.5%, but ever since you opened, you've kind of been selling off. And a lot of other names are selling off. Most of the markets are actually not doing well today. If you look at some of these other names, Microsoft still going down 0.5%, eBay down 9%. That was an earnings from last night. Apple over here still chugging along, almost 1% positive, but your broader indexes really are not doing too bad, but you're under the surface, your average stocks are not doing too well. And I think it's just because the data came out, like I said, almost too good. Durable goods orders month over month came in at 4.7%. 4.7%. You were expecting 1%. That was Trading Economics consensus view. 1%. The average analyst forecast was 0.6%. You came in. Let me just do a little bit of basic math because it's my brain don't want to brain today apparently. You came in almost 8 times better than the average estimate. 7.83 times better. That was almost too good. believe that or not. So recession, yeah, hopefully you're not betting on that, because not looking so likely. Now, we'll obviously see things like the student loan moratoriums that need to be paid back here in the next couple of months. That's going to put a damper on a lot of this economic data, but it's just so strong right now. It doesn't look like a recession or a slowdown is coming in the economy whatsoever. Now, GDP growth rate, you were expecting 1.8% across the board. That was the average forecast from analysts. That was the consensus view from Trading Economics, and it came in at 2.4%. So much better than expectations. 1.8%, as I said in yesterday's video, was really high expectations. You know, it came in at 2.4%. You can't argue with any of this data. GDP price index came in at 2.2%. Kind of in line with expectations. We really didn't have an expectation. Last month's reading was 3%, and that was also the expectation. Now, retail inventories, excluding autos, came in at 0.4%. You were expecting 0.2%. Durable goods orders, excluding transportation, month over month, came in at 0.6%. You were expecting 0%. Initial jobless claims came in at 221,000. You were expecting 231,000. Just everything across the boards. Durable goods orders, ex defense, month over month, excluding defense, 6.2%. The forecast was a 0.1%. This came in 62 times better than expectations. The standard deviations, this is like 5 standard deviations better than what anyone expected. So, yeah, kind of insane. Non-defense goods orders ex air was 0.2%. You were expecting negative 0.2%. PCE prices quarter over quarter came in at 2.6%. Forecast was 3.8%. That was even better than expectations. Core PC prices quarter over quarter, advanced data for Q2, came in at 3.8%. You were expecting 4.2%. Even better than expectations again. And then this is strange. Real consumer spending, quarter over quarter. This is inflation adjusted. Came in at 1.6%. You were expecting 4.1%. So on one hand, you're seeing durable goods orders, everything coming in crazy good. And then you get real consumer spending missing expectations by over 3 times. By like a literal whole standard deviation. Missed expectations. Just some of the data don't make sense. What really caused the markets to kind of start selling off, which is a little bit more understandable, is pending home sales year over year came in at negative 15.6%. You were expecting negative 19%. Those of you guys hoping for this, real estate crash, and is not looking too likely. At least not a big one. Pending home sales month over month came in at 0.3%. You were expecting negative 0.7%. So real estate's really that last frontier that has a lot of inflation in it still, and it's not showing signs of at least slowing down right now. Now, last note that I kind of want to give on AMC before we get into some of the charts and some of the technicals is the option activity. Again, just watch this to see how things kind of populate over the next 2 days or so, the rest of this week, as well as for the next option expiration. You're probably going to start to see a lot of rolling over the next 36 hours or so here until we get to Friday, because you have 237,000 calls out the money, 313,000 puts out the money. If you look at next week's option expiration, you got about 18,000 calls in the money, 111,000 calls out the money, 31,000 puts in the money, and 187,000 puts that are out the money. So a lot of option activity, a lot of that probably starts to get rolled over. AMC down 5.5%, really sitting at this important level at $4.80 per share. You're at $4.78 per share right now, so you're a little bit under that. But I would expect to see a bounce at this level. If this does turn into kind of a bottoming zone, if you kind of bottom at 480, then you can start to talk about potentially making that upside move. Right now, you are neutral on the RSI. That is 53.01. If we look at some other indicators such as the MACD, that is still in very positive territory, and you're actually no longer negative. You're actually positive on the MACD. Anything above where my cursor is positive. Anything under that is negative, and you were negative on the MACD for a long time. You have to go back here to May to get the first positive reading of the MACD ever since the beginning of 2023, which was February back here. First time you've been positive for quite a decent amount of time. So we'll see what happens with that. Pretty suggestive of some form of a bounce soon, and then the ultimate upside move. So that's going to go ahead and do it for this video. Hopefully you learned something. If you did, hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment sections. Again, let me know, do you guys wear Hey Do's? Do you know about them? Let me know down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.